Welcome to TradeTheMBI.com. This is John's report. It's for the 5th of March, and well, I promised you extra volatility, and that's exactly what we're seeing. Throw in the narrative from Trump, the extra tariffs, the retaliation tariffs, then the sudden resolutions, and again, the market is just whipsawed through the news cycle. But at the end of the day, isn't it interesting how these things seem to get resolved when, a little bit of tough play is you know, interacted within the scenario. But this is that beautiful juxtaposition: magenta over yellow, but rising MBI white in a much stronger lead and well below that 10 level. Once we get above that, you start to get reaction movement back to the upside, and that creates that counterflux. The rise of orange here within the DOC, well, it's a continuation. So even if we get sideways action, that you're still propagating with this MBI white narrative, and that's going to make it tough to see things move outside of a limited range underneath that 50% Morganacci lines right there from a daily on the NASDAQ. The other day it performed a little bit better, a little bit stronger return, but you can see much closer in relation to that MBI white versus that magenta, and that separation, and that magenta continuing to rise. And again, short of a dip below the red line. So again, you're caught between cyan and red. That's a continuation move, and we're likely to see more back and forth with this because again, it's a fluid situation, and of course, the market is just wanting to react and take advantage of weakness, scared positions, whatever you want to call it. It creates the dynamic, and the dynamic is flow. And the market's not unhappy with flow. They love change. Consistency, not so much. A mean reversion is always what we're talking about. From a treasury standpoint, again, kind of stuck. This was really relative to oil, and the reality is that the Fed kind of stuck because they really don't know where Trump is going with this. They're terrified of the tariff situation and what it yields, and of course that's going to be the big talk where everyone's going to be clamoring about inflation, blah blah. But that's always in this limited construct of understanding, thinking that, well, all prices must go. No, just the prices of those products. If you don't buy those products, you're not going to be paying extra costs. However, you're going to be getting them from what would, I guess, be a local producer or one that's not within a tariff country. So there's that mitigation that happens within it. So it's such a myopic view the way they look at it, and it misrepresents the total dynamic that takes place. But this is a powerful one. Oil, mid 60s, getting close to where I think that you start to end up with the marginally deflationary area, which I think would be somewhere just under the 60 range. That would certainly be in a point where it's very difficult for price to rise within that, because the cheapness of energy at that particular stage starts to really impact the economies of scale. So, big, huge bonus for the euro in that, because they think that the U.S. is going to fall apart and that economic growth is certainly going to be impacted. You're seeing all these numbers where they're talking about all these GDP reductions based on tariff situations and rising prices, but uh, if that doesn't materialize, then they're going to have a problem. But that was a huge spike for the euro. It's continuing itself today, and they think that chaos is a good thing for Europe, kind of ignoring the reality of the euro situation and how it relates to the whole Ukraine spending, that kind of situation, and whether you're going to have a prop up of Russia back into the global economy again, and what that creates. So that uncertainty leading to some bonus in gold. Uh, Still relative, I think, to where oil is going to go. If we start to see oil continue to decline, I think that it's going to be hard pressed for gold to continue its push. Likewise, from a Bitcoin and those kinds, they're going to be excited by news driven at this particular stage. But the secondary question is how much savings come from what they're doing in changing the government. It takes time for it to, filter through. You're still going to be running deficits, but if they're less than, of course, they're expecting a GDP drop, which would counter that. So if any of those variables that they're predicting don't come true, then you have massive potential gains built into the setup. ETH, slight turnaround from that one as well, still Same conflux where you have MBI weight leading, but magenta still rising. You can see here it is in the 50K, kind of a beautiful representation of that. As that magenta continues to rise with it, that is a forced short cover situation because they don't have enough strength in the imbalance to continue to drive it. And then that forced short covering just continues to drive things higher. But, early on, straight plunge right off the MBI white lead, all those new zeros the whole time until magenta overtook, and at that point you had stabilization. White stayed ahead a little bit, but then as soon as that turnaround happened, that was the beginning of the run. Pretty straightforward, and then it eased off just a little bit at that cross section, and then you ended up with that secondary driver where magenta literally trailing right with MBI white, and that was pure short cover. It's currently where the situation lies now, and you can see that all started here with that MBI. The shakeout readings here. When gold started to go, you had moved to positive shakeout, and once that took place, it was a nice run, and still it evened out and flattened out to some degree. So we'll see if the continued rise shakeout creates another move up for it. That would move you towards the 100% situation. You would need to expect to see that white phase underneath that, but powerful stuff, all clean. Intraday further in the 5 minute range, you can see all early morning was ugly all the way through, and then all of a sudden things turned around and they flipped the put buyers into call buyers, evening out the book. Too many call buyers got in there and they forced it back down again, and you can see that dynamic plays out in real time. Here we are in the European session. It's been rather modest to this recent push right here. So exciting stuff. Gotta love it. As always, though, anything relevant, I'll put in the Skype chat. But just keep following the readings. It's pure gold. Trade well. Have a good one.